There's a whisper in the wind, a subtle current beneath the roaring waves of financial news that speaks of a singular truth, a truth that separates the fortunate from the truly masterful. It's not a secret handshake, nor is it found in a crystal ball. It's a skill so fundamental, so potent, that it holds the power to transform an aspiring investor into a millionaire. And the most profound aspect, it's learnable today. We live in an era awash with noise, predictions fly like confetti, market narratives shift with the slightest breeze, and the siren song of quick riches lures many onto the rocks of financial ruin. But Benjamin Graham, the venerable father of value investing, understood something deeper. In his timeless work, The Intelligent Investor *, he taught us that true wealth isn't built on the shifting sands of speculation, but on the solid bedrock of understanding. It's about dissecting the present, not forecasting the future. This isn't about possessing some arcane knowledge reserved for Wall Street elites. It's about cultivating a specific, disciplined approach, an approach that requires no insider trading, no privileged information, only a willingness to see beyond the headlines and to apply timeless principles with unwavering discipline. This is the bedrock upon which sustainable wealth is not just accumulated, but endures. So, what is this singular skill? It's the ability to truly understand value, not just the price tag, but the intrinsic worth. It's the discipline to anchor your decisions in data and reason, rather than emotion and speculation. It's the quiet power to look at a company, an asset, an opportunity, and discern its true underlying value, independent of the market's fleeting sentiment. This is the skill we will begin to unpack, moving beyond the superficial chatter to expose the practical, actionable implications for your own journey toward financial mastery. What does it truly mean to understand value in today's complex world? The core of becoming a millionaire investor, the skill that truly matters, is the profound ability to assess intrinsic value. This isn't about predicting the whims of the market or jumping on the latest bandwagon. It's about understanding, with clarity and conviction, what an asset is truly worth, irrespective of its current market price. This is the direct opposite of chasing fleeting trends or the ephemeral allure of hot stocks. Consider the analogy of a master art appraiser. They possess a discerning eye, capable of seeing the intricate craftsmanship, the historical significance, the very soul of a painting. While others might be swayed by mere price tags or popular opinion, the true connoisseur understands the deep, inherent value. Similarly, the millionaire investor doesn't just see a fluctuating stock ticker. They see the underlying business, the robust fundamentals, the long-term potential. They see the art beneath the surface. There's a pervasive myth that successful investing is about forecasting price movements. It's a seductive idea, but for those who build lasting wealth, it's simply not the path. The reality is that consistent, sustainable wealth creation springs from a different source, buying assets when they are undervalued and holding them with patience. This mastery is rooted not in speculation, but in rigorous valuation. How do we cultivate this seeing skill? It begins with practical application, learning to wield fundamental analysis tools. Concepts like discounted cash flow models or comparable company analysis allows you to establish a crucial margin of safety. This is a concept Benjamin Graham championed, a buffer that ensures you buy an asset with a built-in cushion against unforeseen errors or market volatility. This disciplined approach transforms uncertainty into opportunity, revealing discrepancies between the market's often erratic perception and the asset's true, intrinsic reality. It's about seeing what others miss. The first skill, understanding intrinsic value, is crucial, but it is only half the story. The second, equally vital component of the millionaire investor's arsenal is the mastery of their own psychology. Uncontrolled emotions are the silent, insidious saboteurs of capital, capable of dismantling even the most brilliant valuation. Think of a seasoned general leading an army into battle. Their strategic brilliance is paramount, yes, but equally important is their absolute discipline, their unwavering control over the troops' reactions. An investor must adopt this same posture, commanding their own emotional landscape. Fear and greed, those primal forces, are the most dangerous enemies, capable of driving hasty decisions that lead to irreversible financial damage. These behavioral biases are hidden risks, often unseen until they strike. Consider loss aversion, where the sting of losing a dollar feels far more potent than the joy of gaining one. This can lead investors to panic sell at the worst possible moments, locking in losses. Then there's confirmation bias, the insidious tendency to seek out information that validates our existing beliefs, blinding us to contradictory evidence and preventing objective assessment. These biases fuel impulsive actions, causing us to sell low during downturns and, perhaps even more destructively, overpay for assets during market exuberance. To counter this, a powerful strategy is to develop a predefined investment playbook. This means establishing clear buy and sell criteria before emotions have a chance to run wild. It requires practicing a form of mental detachment, learning to observe market fluctuations without letting them dictate your actions. Build Building this behavioral fortress is not about suppressing emotion, but about understanding it and ensuring it doesn't derail your well-reasoned, valuation-based strategy. It allows you to execute your plan with unwavering conviction, transforming market volatility from a threat into a source of advantage. The singular skill we're exploring isn't just about valuation or emotional discipline. It profoundly encompasses understanding and actively leveraging the power of compounding. This force, often underestimated in its long-term impact, is the silent engine of true wealth accumulation. Picture a snowball, small and unassuming, beginning its journey down a snowy mountainside. As it rolls, it gathers more snow, growing larger and faster, its momentum becoming an unstoppable force. Compounding works in a remarkably similar fashion. Your initial investments, combined with the earnings they generate, and crucially, the passage of time, create an exponential effect. It's this relentless accumulation that truly builds fortunes, not the fleeting thrill of a speculative gamble. There's a pervasive myth that wealth creation must be rapid, a dramatic surge to riches. This desire for speed often causes investors to overlook the quiet, consistent, and ultimately more powerful force of compounding. The true millionaire investor understands that the tortoise, not the hare, wins this race. It's the slow and steady approach, fueled by reinvestment and patience, that leads to enduring success, not the reckless pursuit of quick, risky gains. Implementing this requires a focus on practical, disciplined actions. It means diligently reinvesting dividends, allowing your capital gains to grow, ideally in a tax-deferred manner where possible. Most importantly, it demands a steadfast commitment to a long-term investment horizon. This isn't about day trading, it's about patient capital allocation, understanding that true growth takes time. Mastering compounding is more than just a financial strategy, it's a fundamental mindset. It's a commitment to sustained growth over the ephemeral allure of quick wins, transforming small, consistent efforts into substantial, lasting fortunes. It is the art of letting time and earnings do the heavy lifting. In today's world, awash in a relentless torrent of financial data, the modern investor's most critical skill must include the ability to filter this overwhelming deluge. It's about discerning the signal from the noise, the truth from the trivia. Without this capacity, even the sharpest valuation skills can be derailed. Think of a seasoned gold prospector meticulously sifting through tons of earth, seeking just a few precious nuggets. So much of the financial news, the analyst reports, the endless chatter on social media is akin to that worthless rock. The true insights, the genuine opportunities, are the rare gold that require a discerning eye and a fundamentally skeptical approach to unearth. This skill is also about revealing the hidden incentives that often drive market commentary. So much of what we consume is not neutral observation, but rather information crafted with a specific agenda. Brokers might be pushing products that yield them commissions, media outlets might prioritize sensationalism for clicks, and fund managers may be subtly promoting their own offerings. The millionaire investor's skill lies in recognizing these biases, in understanding why a particular piece of information is being presented. To cultivate this discernment, develop a robust framework for evaluating your information sources. Prioritize analysis that is grounded in verifiable data. Seek out independent research and always cross-reference claims. When you encounter a piece of financial news or an analyst's opinion, ask yourself two crucial questions. What is the source's underlying incentive for sharing this information? And what is the actual data, the hard evidence that supports or refutes it? This skill of critical discernment is not merely about avoiding bad information. It's about protecting your capital from misinformation and allowing you to focus with laser-like precision on the genuine drivers of long-term investment success. We've explored several facets of the millionaire investor's toolkit: understanding intrinsic value, mastering emotional discipline, leveraging the power of compounding, and filtering information with critical discernment. But all these elements converge into one overarching, ultimate skill: the strategic allocation of capital. This is where analysis, discipline, and foresight translate into tangible wealth. Consider a chess grandmother. They don't simply move their pieces randomly across the board. Instead, they meticulously allocate their resources, each pawn, knight, bishop, and queen, strategically. They anticipate multiple moves ahead, understanding the unique strengths and potential of each piece in relation to the overall game plan. The astute investor must adopt a similar approach, allocating capital not haphazardly, but to those opportunities that present the most compelling risk-reward profile, rigorously evaluated through their analytical lens. This leads us to debunk a common, yet often detrimental, myth: diversification at all costs. While a certain level of diversification is indeed prudent, spreading capital too thinly across too many mediocre opportunities can dilute potential returns significantly. The true millionaire investor understands this trade-off. They learn to strategically concentrate their capital into their highest conviction ideas, those assets they have thoroughly analyzed and believe offer exceptional value. To implement this, develop a practical framework for assessing potential investments. This means evaluating opportunities not just in isolation, but in alignment with your personal risk tolerance, your long-term time horizon, and importantly, your level of conviction based on your research. It's about deciding not only what asterisk to buy, but also how much of it to buy, ensuring that your capital deployment directly supports your overarching financial strategy. Mastering strategic capital allocation transforms investing from a passive endeavor into an active, highly strategic discipline. It is the true engine of millionaire wealth creation, a skill that you can indeed begin to hone starting today. We've journeyed through the core components that forge a millionaire investor. It's clear now that this coveted status isn't bestowed by chance or market timing. It is, instead, the product of an integrated skill set, a robust toolkit that can be learned, honed, and applied consistently. We've seen how rigorous valuation, the bedrock of understanding true worth, must be paired with the unwavering discipline of psychological resilience, shielding your capital from the storms of fear and greed. We've explored the quiet, yet unstoppable power of compounding, the exponential force that turns patience into prosperity, and the vital necessity of filtering the cacophony of market noise to find the genuine signals. As the legendary Warren Buffett wisely reminds us, the most important quality for an investor is temperament, not intellect. This journey has been about cultivating that very temperament, not as an innate gift, but as a developable skill, alongside the essential analytical tools. The path to becoming a millionaire investor isn't paved with luck or speculation. It is meticulously constructed through the consistent application of these learned abilities, transforming the inherent uncertainty of the market into a predictable engine of growth. The promise of this video was to reveal a skill that could set you on the path to millionaire status, a skill learnable today. That skill is not a singular magic bullet, but the synergistic integration of these foundational elements. It is the ability to see value, to control your own impulses, to let time and earnings work for you, and to navigate the information landscape with clarity. The journey begins not with a grand, overwhelming leap, but with a single, informed decision. Commit today to deepening your understanding of one aspect of this integrated skill set. Perhaps it's dedicating time to a new valuation method, or perhaps it's starting a journal to track your emotional responses to market movements. The power to transform your financial future lies not in waiting for the perfect moment, but in the deliberate, informed action you take right now. What will be your first step on this path of mastery?